Ola Electric, India's largest pure-play electric two-wheeler company with over 46% market share, is now making it to the public markets. It's coming to the last street. The near $700 million IPO has gotten a good response, with the total issue having been subscribed over 4 times, nearly 4.5 times. At the price band of 72 to 76 rupees per share, the company would be valued at nearly $4 billion. What are Ola's prospects? And as investors and as Ola Electric becomes public, I think the question which everyone will want to know is, what is the road to profitability? Those are natural questions, first questions which people will have on their mind. So let's bring in Bhavish Aggarwal, the man of the moment. He is, of course, founder, promoter of Ola Electric and a bunch of other companies as well. But for now, we're here to talk about the Ola Electric IPO. Bhavish, great to have you with us here. Thank you very much for your time. Appreciate it.
Prashant, thank you so much for being for getting me on your show. Very excited to be here. Obviously, a momentous day for all of us here at Ola, and very excited to speak to you.
Congratulations from all of us here. So, over 4 times, 4.5 times nearly. And the numbers could change, they could go up.
Yeah.
Were you expecting this kind of a response? What are your thoughts?
So, Prashant, we had very good engagements with investors all through our process in this, right? The roadshows and even in the last few weeks after the prospectus, etc., was filed. So we were expecting a good response. And we also decided to price it in a way that a broad spectrum of investors across institutions, retail, HNIs see into this. And I think that's what has ended up a very strong performance, like you said. If I use a cricket analogy, I think the pitch was tough, but the batsman hit a century.
And by the way, you also had a bit of global market turbulence, right?
Yeah.
And that can't be good for a primary issuance, any primary issuance, not just yours. But it's, of course, things look a little more settled, and the issue has, of course, gone through in a good way. So let me begin by asking you, and I'm sure you understand investors, and you got this question from investors who you were pitching the IPO to, etc. And now you'll have to answer to the public market. So let me prepare you with that. What is the road to profitability, Bhavish, as far as Ola is concerned? Look, the opportunity is there. It's a multi-decadal theme. You're the largest player. But what is the road to profitability here as far as Ola Electric is concerned?
So, Prashant, that's a question many people have asked us, and I've answered in multiple forums. I can't give a specific answer, as you know, but I would tell investors that just wait for our Q1 results, which will be out soon after the listing on 9th August, and you will get to see the financials then. But thematically, if I tell you, if you look at our business in FY24 over FY23, we grew revenue 90%. And our revenue in FY24 ended up at around 5,300 crores. And our adjusted gross margins went up significantly from, I think, 7% to 16%. And our EBITDA went up from negative 43% to negative 19% in just 1 year. So this shows you the kind of improvement the financials already in the public domain showcase. And this is because, in manufacturing businesses, there are 2 themes I want to leave with your viewers here. In manufacturing businesses, as you grow scale, and you've seen very significant volume and revenue growth, your cost structure, the factory investments, etc., don't scale linearly with it. So your margins keep expanding as you grow to a certain level of scale. And we are in that process of growing our volumes and our revenue to kind of grow into the volume of investments, capacity investments that we've already done. Secondly, our core strategy has been to vertically integrate, and our margin improvements over the last 2 years has been driven through this kind of vertical integration of manufacturing and technology into different EV components. And the heart of that, the most important one of that, is the cell itself, the lithium cell, which is actually, like the prospectus says, going to be ready by early next year for commercial production. The trial productions in the factory is already complete. And that, as you know, cell is the biggest part of the vehicle cost. So once we make that in India, once we make that in Ola Electric, that will further improve them.
You give us a tease, right? Q1 earnings will be out shortly after the listing. So obviously the numbers are going to be strong. Obviously you can't go into specific details, but some of those numbers that you mentioned, which is over FY23 to 24, gross margins, and I have the numbers here, went from 3% to 13%. EBITDA margins improved from -48 to -25.
Yeah.
At what point, and you, by the way, said in an earlier interview to the channel here, that you will turn profitable in the near future. So again, without putting this quarter of that year, What is
Yeah.
near future? I mean, in the ballpark.
So Prashant, again, I can't give you a timeline on this, but I can say that again, if you look at our volumes, FY24 volumes were almost double of FY23. And Q1 of FY24, the volumes are in public domain in the government Vahan portals, and you can see how they've grown quarter on quarter, year on year. So there is a point when the volumes hit a certain level where hence the margins or the EBITDA gets to a break even and a beyond level. Beyond this, I can't share, but our focus is to drive growth and profitability both as we build this company to the future.
So in FY24, you sold 330,000 units and you generated revenues of about 5,000 crores.
Yes.
Could you, without going into the sort of at the net level, at a top line level, what should we expect in FY25?
Again, too early for me to give any expectations or guidance. But if you see quarter on quarter, our quarter one numbers over same time last year are high. July, which is again in Vahan, we I think grew 110% year on year over last July. So these are all volume numbers in the public domain due to the government Vahan portal. So this gives you an indication of what kind of growth we're seeing in our core scooter business. And we've also told the market that we are working on motorbikes. We have our annual product launch event on 15th August. Every year we do it on 15th August, Indian Independence Day. So stay tuned. We will be announcing some very exciting stuff on 15th August, which is just about 10 days away.
Okay, no, absolutely. And we will be sort of tuned in for that. Now, one of the investors, actually not one, but two investors that I spoke with who have actually put money on the anchor side,
Yes.
they told me that the way costs and the reason, I mean, one of the ways to profitability could be the in-house battery cell manufacturing, which you're undertaking, right? You spoke about
Yes.
being vertically integrated, and how that perhaps is a lever where you can bring down costs significantly. So,
Absolutely.
give us a sense. I mean, how much of a lever is that? We're talking about in percentage terms. I mean, as opposed to the cost of cell now, once you're fully there, you get to some of these. So 5 gigawatt hour. I mean, eventually you want to go to 20. I mean, what is the leverage available on this front, cell manufacturing?
Sure. So good question, Prashant. And I think for all your viewers and investors also, it's important to understand that, just like in the ICE era, the engine was the heart of the vehicle. In the EV era, the cell is the heart of the vehicle. And hence, 4 years ago when we began this company, we decided to focus on making our cell in-house. And if you look at the amount of cost contributed by the cell, if a vehicle costs 100 rupees, the cell costs about 30 or 35 out of that. This is like an average across multiple companies. So the biggest single cost item is the cell, which all of it in India today is imported by all companies. There's no domestic manufacturing. The first gigafactory is what we have set up. We have already completed the gigafactory. We have commenced trial production, and commercial production will commence early next year after about 7-8 months of quality testing and process fine tuning. So once that happens, you can assume the entire margin that global cell companies make, as well as a 5% duty that cells have when they come into India. All of that money we will save when we start using our own cell in our vehicles. That'll not be fully there on day one because there'll be a transition period of all our products moving to our own cells over the course of next year. But step by step, all that margin on 30% cost, assume saving 20-30% margin, all of that will eventually come into our books.
Sorry, is that you said 20 to 30% savings as opposed to not using your own manufactured cells? Is that what you're saying?
So, if you think of the cell cost as 30 rupees on a 100 rupee vehicle, out of the 30 rupees globally, the companies make about 20-30% margins, the global cell companies. So that's the margin that we will keep if we make the cell ourselves.
I see. Got it. There is also talk that as far as lithium battery supply chain is concerned, there is huge amount of, again, this is coming in from, China is, of course, the number one player. A lot of overcapacity and sort of consolidation, which is happening right now. And that's a global industry. I mean, could you give us a sense of how this is likely to impact some of these plans at all, if at all, that is, Bhavish?
Prashant, cell as a component is a technology-oriented component. So what happens is it's not a commodity that is traded in the market. As technology improves, every couple of years the cost comes down and performance improves, like we see in chips, etc. So 10 years ago, the cost of the cell was $1,000 a kilowatt hour. Now it's about $100 a kilowatt hour, and 5 years hence it might be $50 a kilowatt hour. And that's linked to both capacity growth in global supply chains. It's linked to technology improvements. It's linked to more lithium mining in the world. These are the three vectors that reduce the cell cost. Now, for us, because we are a consumer of lithium cells, and we're not in the lithium mining business. We are in the business of taking the processed lithium and other cathode anode components and assembling a cell, and then assembling a vehicle with that cell. So for us, any input cost reduction actually helps. It doesn't have any concern to us in our input cost or in our output pricing in that sense.
And since this is such an important area for you, Bhavish, is the technology itself settled, or as you say, I mean, it's still in the evolution stage? So there could be some dramatically new technology which comes. And how fast will you be in your factories where you're making these cells be able to pivot to anything new which comes, Bhavish?
The point with technology-oriented components, Prashant, is to actually be investing in R&D and creating that technology lead and IP in-house. So if you're doing that, you're actually able to lead the technology wave and not just be a technology taker, but rather be a technology maker. So, similarly for us, since we are not really it's not like we are looking to invest in manufacturing only when the technology is settled. The manufacturing part of our investments are actually agnostic to technology changes, largely. It's only the actual chemistry, etc., which depend on technology and where we do our own IP creation, so we control our technology. So in that sense, the risk is lower for us and the capital for the manufacturing is largely protected.
So let me give it one more push. You would agree this much, right? This is the biggest lever you have. I mean, as this comes to scale, cell production comes to scale within Ola, that is the biggest lever you have, because everything else is external, right? You don't have control over government sort of programs to boost EV sales. I mean, it may happen. The current one is expiring in September. We perhaps will see a new one. I mean, a lot of it is what competitors are doing. All of that is sort of outside the purview of what you can do. What you can control is sort of saving costs on the cell side. Would you say that is the single biggest lever you have?
Prashant, I would say the vertical integration of manufacturing of all EV-centric components is the broad single lever. Cell is one important part, motors is another part, software, electronics. There are a lot of components which go into an EV which were not there in ICE vehicles. And that drive a lot of, more than half the cost of the vehicle is driven by these new to automotive components which are new in EVs. Now, we are the by far the leader in vertically integrating all of these components into our manufacturing and technology. And cell is absolutely the centerpiece of that. So that is one important lever. The second lever I would actually just underline again is just increasing penetration and scale. As we continue to scale our scooter portfolio, and now we have about 5-6 products in scooters, and as we add on let's say other two-wheeler portfolios, motorbikes, etc., and hence as our utilization in our factories, etc., our supplier utilizations go up, that will also further improve margins. On government subsidies specifically, I think in general now the industry is less dependent on the FAME subsidy. 2 years ago it used to be 60,000 rupees a vehicle. Now it's 10,000 rupees a vehicle, and yet the industry is growing. So that I think in general the industry has baked into its cost structure rejigs as well as business model design.
But to that point, penetration has struggled, right, over the last couple of years. I'm not talking about Ola, but EV penetration over the last 2 or 3 years. I mean, it's in that broad, 3 to 6, 7% kind of a range.
So penetration, Prashant, should be seen in a segment because if you see between two-wheelers and four-wheelers, and within two-wheelers, scooters and motorbikes, right? Now, four-wheelers have been a little slower. They got off to a slightly sharp start and then kind of plateaued after that. Because in four-wheelers, yet the cost structure for EVs has to come down to the ICE level. But in two-wheelers, all of the action has been in the scooter segment. Motorcycles is still early. We are coming out with our products later this year, but largely early. And hence, in motorcycles, penetration is largely zero. In scooters, actually, the story is very different. 3 years ago, when we launched our first product, penetration was, I would say, 1 to 2% electric. Now, penetration is about 15% electric in just 2 to 2.5 years, which is a very significant jump. And as we have launched sub 1 lakh rupee scooters, we've seen our own volume growth. If you see our volumes in October last year to July, I think we have almost doubled our volumes in that period with our sub 1 lakh scooter launches. And I think I see that continuing over the next few quarters.
You said that the subsidies from the government are not that crucial anymore, Bhavish, for EV adoption, for further penetration?
I said they're not as material in today's sense because FAME has reduced from 60,000 to 10,000, and yet the industry has grown. Now, I have been public about my perspective and our Ola's perspective that we do feel the government, the FAME subsidy should continue for a couple of years more so that the industry gets a kind of a smooth timeline to engineer their way out of it. And I think generally that's what the government has also indicated, that FAME 3 will have a certain continuing subsidy at the current levels for the two-wheeler industry, and I think that's reasonable.
Let's talk about share of market, Bhavish, right? I mean, you're the clear leader, but you got so many well-funded ICE players, incumbents, traditional two-wheeler companies who've got big plans in this particular segment. You've got the first mover advantage. You've got, cell manufacturing in-house. Is it your share to lose in that sense? Because you're starting at a high 46% share.
Yeah.
What should we expect? I mean, internally, the ambition would be to grow it, but walk us through the thinking here.
Yes, 2 points. Firstly, I was not the first to market, actually. I was the last to market. Ather was there before us. TVS had its electric vehicle before us. Bajaj had its electric vehicle in the market before us. So we were the last to market. And in that sense, we learned from everybody else's mistakes, the kind of products that they had built, which consumers didn't want, and the kind of manufacturing, supply chain, distribution strategies they had. So we built a very different strategy. We built a vertically integrated manufacturing strategy. We built a vertically integrated front-end distribution strategy, and a much more focus on technology, which drives margins for us and keeps cost down and keeps innovation high. All of this has helped us to get to this leadership position in the e-two-wheeler market. But when I look at market share, I don't look at the e-two-wheeler market at all. I don't think my competition is with the current level of electric two-wheeler players. And these are all good companies. I respect them. I think they've brought in some products. They've had some mixed results, sometimes up, sometimes down for their market share. But our focus is actually to penetrate and take EVs to a much higher share of overall automotive in India. And that's where we focus on. And I believe if we keep innovating with both technology and bringing more and more products to the market, which Indian consumers love, market share is an outcome of all of that, right? In the end, that's what matters.
Now, so that 46% market share on electric two-wheelers, that is the number. I mean, the FY25 till date number. So I'm just wondering, I mean, as you're expanding capacity, but you will have more options for the consumer. You accept that, right? Over the next 1-2 years or so in the two-wheeler space.
We already have enough options for the consumer. Like I said, I was the last one in the mix. We had a lot of we had enough companies, the Hero Electrics and the Amperes, and then the big guys, TVS, Bajaj, and other startups like Ather, all in the market before me. I was actually pretty much the last guy. But we have got something right in our strategy, which has allowed us to become, in just 2 short years, by far the market leader. And but like I said, my focus is not on the 46%. I'm looking at the future. I'm looking at the EV penetration in the market. And if we bring good products at the best price points for consumers, we will continue to retain or probably even improve our market leadership.
So what I'm trying to do is get to a size of market, say by FY26. I mean, I think you've already done that. You expect penetration to be this much. I mean, the number of industry units sold. What would your share be? And then, I mean, eventually you would want to build in those numbers. I mean, I'm sure you've had these discussions with investors, and I just want you to share some of this.
Sure.
I mean, in terms of just projection, not exact down to the last decimal numbers.
Yeah, if you look at the market again, Prashant, like we said, two-wheelers, scooters is already at 15+% penetration. And if you see how over the last 2.5 years it's grown from, let's say, 2% to 15% in 2.5 years. Now, looking ahead, let's say a couple of years from now, that 15 could be, again, these are third-party reports. People are saying in 4-5 years, it'll be about 40 to 50%. People might discount that or say it might be higher. It all depends on how the market plays out. But broadly, I think the journey of EV penetration is
which is how many units then, total industry EV?
Overall, scooters today is about, let's say, 1/3 of the two-wheeler market. The two-wheeler market is 20 million. The scooters is 7 million. So if you say in 2 years, 30% is electric. So that's about 2 to 3 million in just scooters. Motorbikes will begin their journey when we launch our products later this year because there are no other good quality products in the market. And then that also will have a similar penetration journey. But you know, the reason, Prashant, for your viewers, there's a very simple way to think about this. ICE vehicles and ICE fuel are both inflationary. पेट्रोल के दाम ऊपर ही जाते हैं, if I say that, right? We, you know, as Indians we know, 50 रुपए से 100 रुपए हो गया पिछले डेकेड में, जो भी है पेट्रोल का दाम एक डायरेक्शन में जाता है. दूसरा, the vehicle cost itself because of emissions compliance also only goes up. BS4 to BS6 has increased vehicle prices for the same vehicle. Now for EVs, pretty much the reality is the reverse on both fronts. Our Prime Minister has launched the rooftop solar scheme, where he has a vision that he wants to make power and transport free.
No, absolutely.
Yeah, so the cost of transport will go to zero in India as more and more solar at homes gets deployed. Secondly, the cost of the vehicle also comes down because the cell price is only reducing. So this story only ends in one way, in one end, in my view, and that's why our focus has been to purely focus on EVs, not transitionary technologies like hybrids or CNGs, and build very strong leadership competencies in EV.
You know, out of that 2 million number, 2 to 3 million number that you said, right? This is by F5 27, 28?
There are different third-party reports, Prashant. So if you see, people are saying by FY28, 40 to 50% of the overall two-wheeler market will be electric, not just scooters. So that will make it about 8 to 10 million units in 5 years from now. That's what the Red Sea report that we've put in our prospectus says. And you can say, okay, there'll be different stages of penetration in scooters versus motorbikes. But blended, that's where the market could be.
Okay, all right. And now, sort of allow me to sort of come in once again on the cost side, right? I'm just trying to, because when you release those numbers, and I hope we get a chance to chat again post the numbers, a lot of the focus will be on some of these line-by-line items. On the cost side, with scale, presumably in manufacturing businesses, economies of scale start to set in. But you're also expanding your sort of fixed cost base in a very large way. So what is the interplay there? I mean, wouldn't fixed costs overall go up in a more permanent kind of a way?
See, our fixed costs fundamentally will not expand in line with our revenue. The revenue growth will be higher than, let's say, fixed cost expansion. And specifically, if you see, most of the fixed costs might expand in the cell side of things, whereas the automotive, we have already had a fairly large deployed capacity where we'll grow into that. There are two different ways to look at financials as our volume increases. One is the gross margins, and you'll see gross margins that reflects the vertical integration and to some degree the scale, hence our procurement leverage with our suppliers. The second is the operating leverage we get below gross margins, which are EBITDA margins with increasing scale of revenue. And you'll be able to see both these as we start reporting quarterly results in the future.
You know, at a EBITDA level, you had a loss of 1,300 crores. At what point will you go? Will you come closer to this being close to zero, and then you tick on the other side? Will it be
again, Prashant?
Yeah,
I can't answer that straight. But if you see, our EBITDA percentage in FY24 was negative 19%, whereas in FY23 was negative 43%. So that's a 24 point improvement in just 1 year with revenue doubling. So if I'm sure you and your analysts and your viewers especially can do their own forecasts.
Got it. Bhavish, we'll leave it there. Great conversation. Thank you very much. And I'm sure this is one of the many occasions we'll have to speak with you. We look forward to those announcements on the 15th of August, as you said, where you, I think, unveil a new product line, perhaps. And of course, after that, first quarter results. Thanks very much, Bhavish Aggarwal, for joining us with that chat.
Thank you, Prashant.
Thank you. Well, that is Ola Electric, which makes its way to the public markets. That's it on this special show. It's a wrap on the broadcast. Stay with us. More news and updates follow after a quick break.